Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today. Let's pretend that this strike right here, instead of it saying 40.65, says 46.65, right? So that would be the condition that we would be playing with here, and we would be playing in the area below that. So we're below it in strikes, so we would be down in this area. This is delta. These are the deltas of the JPM hedging structure, and basically the short strike, this is from our perspective, basically the short strike is sitting right here at 46.65. Again, this is not from this chart, but what I'm going to talk through about it being a magnet will make sense here in a second. So if we are below, and just to put everybody in perspective here, if we're dealing with the hedge fund structure, it looks like this. We've got a short put, long put, and short call structure at any one given time, and it looks like this. And there's some particulars here. I'll hold a separate seminar on JPM so that we can all understand what's going on. But when you look at the deltas of this strike, it looks like this. This is the blue line is called the terminal level, and then these things here are the interim deltas based on dates as you go towards those given towards the expiry. So we're playing down here. And is this a magnet? This is the question that you're asking. So when you are in this area, what's happening, and the gray line is the nearer date, the green line is a little bit further away, the red line is closer to expiry, and then the blue is the terminal expiry. And so you can see that deltas are collapsing from a negative value towards zero. So in this particular case, the short deltas collapse towards zero on the JPM side, or on our side. The dealers are coming at this, and they're collapsing on the other side. They've taken the other side of the trade. So what happens is that as the dealers are losing their positive values of delta, they buy, and they must buy to hedge flat, and that puts upward pressure on the prices. So from a JPM perspective, as we get closer and closer to this, could it become a magnet? Now, ignoring all of the other strikes that you see here, the answer is yes, and here's the proof, right? So all things considered, in a pure JPM world, yes, this can become a magnet. It's negated by other stuff out here, and that's the complicating factor. But in general, yes, that occurs. Now, what about the other side? As price moves up, you are now in the money. So now we're talking price would be up in this area, if not higher. And so we would be in the money. And if you're in the money, you're over on this side of the delta, the terminal delta curve that you see right here. And so as time, this is charm, as time marches on, you can see the deltas are no longer collapsing towards zero, they're collapsing towards -1 on our side. We're getting shorter, the dealer's getting longer, and all things considered, the dealer must sell to get back. This is why the JPM strike can be a pinning or a magnet for prices. So the question then becomes, because we've seen it fail, and we've seen it become that exact magnet. So March of this year, we blew through it, and we went up to 4,100 like a day or two beforehand. And that's because if I were to open, as you can imagine what's going to happen here. As we move up, the call speculators are going to continue to add calls as the yellow line moves up. So the out-of-the-money call speculation is going to continue to increase. As the call speculation increases, we're going to get less negative in our mathematics that we use here at GammaEdge. We assign short calls, which are the equivalent of long puts, due to put call parity. And we know a long put has a negative delta, therefore we track it that way. This is going to get less negative. It's going to go from minus 40,000 to minus 30,000 to minus 20,000 to minus 10,000, and maybe even go positive. And if it goes positive, what's its influence? What's its magnet potential? Virtually zero, because all of the other stuff around it is going to effectively be the market. And this is why we feel in March we actually moved north above the JPM strike, because it effectively had been negated. So the answer is yes, it can be a magnet, but there's always an asterisk on these statements. And the asterisk is it depends, and it depends on the surrounding structure. This is why structure matters, and this is why we track structure.